Can you stand another video that challenges the conventional advice on retirement? I hope so, because this is a big one. What if I told you that paying off your mortgage before retirement, one of the most sacred rules of retirement planning, can actually hurt your retirement in some situations? Because a lot of retirees rushing to be debt-free ends up costing them in terms of flexibility, income, and even peace of mind. I fully get that paying off your mortgage has strong emotional appeal, but paying off your mortgage is first and foremost a financial strategy. It should only be done if it makes financial sense. If you pay off your mortgage without seriously disturbing or compromising other areas of your finances, then certainly have at it. But don't always assume paying off your mortgage for retirement is a winning strategy. So let's talk about when paying off your mortgage is actually the wrong move. There's a lot spoken about how it's the right thing to do, so I would rather take the contrarian approach and say, maybe this won't work. Let's talk about it now before you do it. For decades, we've been told the same thing. Go into retirement with no mortgage and you'll be all set for the rest of your life. Sometimes. Yes, being mortgage-free can be a great goal, but retirement planning should never be about following rules blindly. This is your life, your retirement. You make up the rules, whatever works for you. And to do that the right way, you're going to have to think out of the box and think about maybe things that are unconventional, and that's what I want to talk about here. Retirement is about maintaining balance between your income, your savings, your expenses, and your lifestyle. Sometimes paying off your mortgage will serve that purpose, but there are other times when it can just be a bad strategy that takes away from it all. So I've come up with 6 situations where paying off your mortgage might actually be the wrong choice. Number 1, when paying off your mortgage will seriously interfere with your ability to fund your retirement accounts. Funding your retirement accounts, 401ks, 403bs, TSPs, IRAs, generally needs to be the priority when you're preparing for retirement. That's because retirement accounts are needed to generate income for the rest of your life. Once you retire, income generating opportunities will gradually dry up, especially as you get older. By the time you hit your late 70s, 80s, there aren't going to be many opportunities to increase your income. So that's when you're going to rely even more on your retirement savings, and that's why it has to be a priority. Large retirement plan withdrawals could also cause you to lose a tax subsidy on your ACA health insurance. If you retire before you're eligible for Medicare, you're probably going to have to rely on a health insurance plan from the ACA. Those make a lot of sense if they're tax subsidized. If they're not, they can be incredibly expensive. I know one couple paying over $2,000 a month around 60 years old. You want to avoid that because that could be a retirement killer right there. Also, the amount of income that you earn will affect the premiums you pay for Medicare. You reach a certain threshold, I think it's around $180,000 for a couple, much less for an individual, and your premium will go way up. So what happens there is when you take withdrawals from retirement plans, let's say to pay off your mortgage, that income is added to your taxable income. And that's used to figure what your income is for calculating your ACA subsidy and your Medicare premium. So keep that in mind, discuss it with the tax preparer before you do it. Another point to consider, retirement accounts, when you're funding them, you're doing it with pre-tax income, most typically. If you're paying off your mortgage, that's funded out of after-tax income, which means there's no tax break on it. So you're getting a subsidy when you're saving money for retirement. There is no subsidy when you're paying off your mortgage. That can create a serious imbalance in the financial benefit you're looking to get from paying off the loan. Reason number 2, when paying off your mortgage will leave you house poor. Do you know anyone who has a lot of home equity but very little in the way of cash in the bank or investment funds? That's the definition of being house poor. On paper, they may have an impressive net worth, but when it comes to accessible wealth, there's not much available. That's a tough way to live at any point in life, but even more so when you're retired. If paying off your mortgage means emptying savings, depleting your emergency funds, or pulling large sums from your retirement accounts, that is a red flag. You shouldn't even be thinking about paying off your mortgage if any of those apply. In retirement, cash is oxygen. Please keep that in mind. Once you lock money into your house, it's hard to get it back without either selling the house or borrowing it. A paid off house will not help you to cover medical expenses, handle stock market downturns, or pay for major repairs. Please be aware of that and make sure that you have enough liquid cash to cover those. Otherwise, don't even think about paying off the mortgage. From an emotional standpoint, having a lot of home equity may be very comforting, but the only way to get out if you need funds, the only way to get it out is to borrow it back, and that'll essentially replace the mortgage you paid off with a new debt. So keep that in mind. Reason number 3, when you have other non-housing debt, I think most financial advisors will take the same position on this point. Paying off consumer debt has to take priority over paying off your mortgage. And that includes credit cards, car loans, student loans, other installment loans. It makes no sense to pay off your mortgage if you have a lot of consumer debt. Either way, you've got payments. You're better off paying off that consumer debt. The advantage here, the consumer debt tends to roll over. When I was in the mortgage business years ago, there was a saying, once a Visa, always a Visa. Even if people paid off a Visa to qualify for a mortgage, we were to disregard it because chances were they were going to go back in debt on that credit card within a few months of closing. And that's true of most consumer debt. Mortgages, on the other hand, are patient debt. If you've got a 3% mortgage, it's going to be 3%. The mortgage payment's going to be fixed for the term of the loan. It's not going anywhere. It's patient debt. Just take your time paying it off. Concentrate instead on the consumer debt. In fact, usually on a dollar for dollar basis, you're going to get more cash flow benefit from paying off consumer debt than from paying off your mortgage, largely because of the interest rates. Reason number 4, when paying off your mortgage will cause you to seriously delay retirement. A large mortgage will require years to pay off. You have to be realistic about what the effort's going to be to make it happen. If you consider paying off your mortgage to be essential for your retirement, you might delay your retirement to get the job done. It would make sense. If paying off your mortgage will delay your retirement from say, age 62 to age 70, it may not be worth the wait. Once you're over 60, I'm going to tell you as being over 60, time is at least as valuable as money. If you delay retirement to pay off the mortgage, it may feel better emotionally once it's paid off, but you may not feel as well physically by the time that happens. It's unfortunate, but it's true. As we get older, we're more vulnerable to all kinds of physical ailments. Everything in life is a trade-off between time and money, and that's something you've really got to be thinking about. So if you're going to delay your retirement for a year or two, that might be worth thinking about. If it's going to be several years, stick with the mortgage and enjoy the time you have in life. Reason number 5, when you think paying off your mortgage will enable you to live rent-free. The whole idea of living rent-free is an illusion. As long as you're living anywhere in the world, unless you're living in 100% government subsidized housing or in a corner of a relative's house where they say, go ahead and occupy that, we won't charge you anything, which both situations are very rare. You're going to pay something to live no matter where you are. So there is no rent-free. Get that idea out of your head. Even if you pay off your mortgage, you'll still need to pay property taxes, homeowners insurance, homeowners association dues if you live in one of those neighborhoods, plus repairs, maintenance, replacements, and periodic renovations. You're going to have that no matter what. In some areas, property taxes and homeowners insurance combined may even be higher than your mortgage payment. I'm thinking of some of the areas around Florida and California now where fire, earthquake, and flood insurance is out in orbit, thousands of dollars a year. And then you have some of the states, New Jersey is a good example, New Hampshire is another, where property taxes are very high. A lot of people who paid off their mortgages are now paying more in property taxes on a monthly basis than they were paying on their mortgages. So there is no rent-free, and paying off your mortgage doesn't make the whole thing go away no matter what. Finally, reason number 6, when the return on your investments is higher than the interest rate on your mortgage. I saved this one for last because it's probably the most commonly cited reason for not paying off your mortgage, and it's simple math. If your mortgage is 3% and you can earn 4% on CDs or 1-year treasury bills, which you can, or say 7% on a balanced stock portfolio, stocks and bonds, you'd be better off keeping the money invested and just letting the mortgage ride. Again, mortgages are patient debt. They're not going anywhere. And it'll pay itself off in time. And a big advantage once you get beyond, say, 20 years on a mortgage, most of your payment is going into principal anyway. So it really is a forced savings plan at that point. Don't get too upset about it. Every dollar you use to pay off your mortgage is a dollar that can't be used to generate dividends or interest income, produce rental income, or even support a business or passive income strategies. If your investments or income streams can reasonably outpace your mortgage interest rate, paying off the loan may actually reduce your retirement income. So again, if you need to, spend some time crunching the numbers, talk with a financial advisor, an accountant, whatever. In retirement, income often matters more than having no debt. So please give that a lot of consideration before you make that final payment. My final thoughts: in retirement, the goal isn't to be debt-free at all costs. I know in some quarters that's basically what you're going to hear. Get out of debt and everything will work itself out. I don't think it's ever that simple. It's really about being financially resilient. And sometimes paying off your mortgage might reduce that resilience, and that's something you have to avoid. Before you rush to pay off your mortgage, ask yourself, what am I giving up to make this happen? What risks am I increasing? And there may be, as we've talked about so far. And does this actually improve my retirement security on a long-term basis? Because sometimes the smartest move is keeping the mortgage right where it is. And I know that that's counterintuitive. It's not what you typically hear. But if you're going to retire and you want retirement security, you've got to think about all these things before you pull the trigger. Are you wrestling with the decision to pay off your mortgage or keep it in place? Or have you faced this decision in the past? What were your thoughts that guided you? Leave your comments below and let's chat about it. I might even turn your comment into a future video. If you like the video you're watching, hit the like button below and subscribe to the channel. And thank you for watching.